Good morning, good afternoon, good evening, wherever you are, whenever you are. Welcome to a new DC live stream. I'm your host, Matt Batiri, here with you today with another Bitcoin technical analysis video. Before we jump into obviously looking at Bitcoin, I want to look at the Bitcoin dominance, which has obviously done pretty well over the last sort of month or so. We have obviously pushed up from the 39.5% mark to roughly around 44.75, and obviously down over the last couple of days due to the fact that Bitcoin has been on a bit of a tear, did sort of pump up about 30% over the last sort of month. And it's not surprising that people are wanting to take profits on that sort of 30% gain. We did kind of go up in a straight line, and it doesn't surprise me that things are cooling off now and we're having a bit of a retracement. So we can see the money flow slowly coming out of Bitcoin. Usually means when something like this happens that altcoins are doing quite well. So when Bitcoin goes sideways, people are like, hey, I want to put money into something that's moving. So the altcoins have done obviously quite well over the last week. So anything that you like in the top sort of 200, it's probably done fairly well. I know that Trust Wallet, Matic, those types of coins that I've been sort of charting in the altcoin technical analysis video on Wednesdays have done absolutely amazing. And so it doesn't surprise me that those altcoins have done fairly well over the last sort of week. So I think we're going to get maybe at the end of this week, early next week, we should get another push up with Bitcoin. I don't think that this current sell-off is anything to be worried about too much. I do expect higher prices in Bitcoin after it takes a little bit more sideways, maybe even possibly down. So let's chart a couple of things of where we could possibly see Bitcoin go down. Now, normally, previously, I have removed most of these lines, but I think it's important for you guys to see these lines that I usually trade off. These daily resistance and supports, weekly resistance and supports, and also monthly resistance and support. So right now, we are sort of being supported by this weekly support range right here. It's also the value area low of this entire sideways trading range that we've sort of been in. And it feels like it's been forever, but it's been about 2 weeks. So for 2 weeks, we've kind of been trading sideways from about 22.5 to 24.2. Bitcoin having a bit more of a dump here over the last sort of 48 hours because we've been printing a lot of bearish divergences, high prices, below highs on a lot of metrics. So let's have a look. If we do, break this this value area low. So if we get a closing 4-hour candle below 22,500, let's have a look at where we could possibly see, the next sort of support range. So I'm going to draw a fib from the major low here at 20,400 to our high, like so. And first of all, want to see if there's any confluence. So there's a confluence right now where we're at the 382 Fibonacci retracement from this current price point. The 0.5 is down at 22,335. So we could even just wick down to there and then push up. You can see that we had 3 weeks over the last 2 weeks, basically around that price point. So it wouldn't surprise me if we grab a bit of liquidity here. If we go down this far, a lot of people think we'll probably break down. So this will provide a lot of liquidity for the bulls to then continue pushing Bitcoin a little bit higher. If, as I said, we get a 4-hour closure below sort of 22,500, I'll look for the golden, what's it called? The Fibonacci golden pocket. There we go. To hopefully support us, because that's also where we had a daily wick back here on the 18th of June, around about 21,500. So we could get some support here. Now, that's only one fib line that I've obviously drawn. We can draw another one from this low here to the high here, see if there's any confluence. Well, I can see, let me just remove these daily high volume. Okay, let's do that to start with. Let's see if there's any confluence in the Fibonacci's. So we can see that there's a confluence of the 236 and the 0.5 right here, as I mentioned before, at 22,300. The golden pocket for this fib is a little bit lower. It's 19,300. And there is a confluence at the 786 and the 386 right here at 21,200. We can also draw one more fib from the ultimate low here at 15,400 to the high. This adds just another dimension once again. So we've got the 236 basically around that sort of zone between 22.3, 22.2. The golden pockets, fairly similar, but it's too wide of a range to sort of be like, hey, we could go between 19,300 and 18.4. I'd rather give you something a bit more specific. This is why I would also encourage you guys to draw weekly points of control and also daily trend lines. I know it seems really, really ugly when you do that. You're like, well, it could stop basically anywhere on the way down. And that is true. But this is where you need to start paying attention to other things such as volume. So a lot of people in the trading space like to use exo charts. So if you are a trader, you're someone that wants to get a little bit more insights, I definitely recommend you check out exo charts. You can see lots of different things on exo charts. You can see volume. Why is volume important? Well, volume is important because when you get to a certain price point, what exo charts allows you to do is to check how much volume is trapped when we get to a certain price point. So I'm not going to go into how to use this, but basically what I can do is I can see by the volume candles how much volume is coming in at a certain price point. And if we're unable to break that price point with the amount of volume, it means a lot of people are shorting the low. And you never want to be shorting the lows because what you're doing is providing liquidity for the bulls. The same way that when we're going very high, like what we did back here at 24,200, 300, we provide a lot of liquidity. A lot of people probably thought we were going up to 25,000. So therefore, people were opening up longs here thinking it's a breakout, but it provided a lot of liquidity for the bears. And obviously, we pushed the price down ever since. Now, we do have a naked point of control up here at 23,750. So that is a resistance line that I would put up on my chart. So let me just turn off these fibs. Let me find a naked point of control. So I'm going to clone this one and I'm going to go 23,750. I'm pretty sure. Let me just double check. 23,750. Yep. So bang. So we have a daily resistance and a naked point of control up here. So let's just say we do bounce from here. We could possibly see, could we get a fib retracement golden pocket? Okay. So if we bounce from here, we could possibly get a push all the way back up to 23,600, even 700. This is where we've got the golden pocket. We've got confluence with a daily resistance. We also got confluence with a point of control, so a naked point of control from the previous days, basically meaning that during a daily trading range, the most amount of Bitcoin was traded at 23,750. And since then, we've broken down, but we've never come back up to see if this now becomes a resistance line. So if price does come back up here, well, I could see this as a resistance line. It also has a lot of confluence, as I said, with the golden pocket. So I could possibly look to short there depending on the volume that I see on exo charts. So let's have a look. What else can we talk about? Let me just remove, let me take off the weekly and the naked point of control. Actually, let me just keep that. Let me put the fibs back on. Let me remove that most recent fib. So we can see we have a lot of confluence around here. We have a daily, we have a 386, we have a weekly, all around this price point here. So if we do sort of break down, I'll be looking to get for Bitcoin to find some support around that 21 $20,300 to $20,900 range. And this could be a perfect opportunity for me to compound the long that I'm in from 17,300. Much like I did get this low for my long, but as I knew we were breaking out, I did sort of compound a little bit, so it added an average price to about 17,300. So that long is doing quite well, but I have been looking to compound that to obviously make better returns. So I've been waiting for Bitcoin to sort of pull back. My first area where I'd be looking to add or buy more Bitcoin, so to speak, is, like I said, 21.4 to 20,900, and then possibly the golden pocket down here, which would line up. Let's have a look. I do know that we had a fair bit of trading around here, so I just want to get a couple of metrics. So we have the point of control of this entire sideways range, basically bang in the middle of not this. There we go. This Fibonacci golden pocket. So you can see that 19,200 is the lowest that I would like to see Bitcoin come back down to, whilst remaining bullish. That's the biggest thing. Whilst remaining bullish, I could see the Bitcoin price come back all the way down to 19,300, and then obviously continue its push to the upside. I think right now I am confident that Bitcoin is coming out of its bear market through this bear market bounce. I still don't think that the ultimate low is in. I'd love for it to be in, of course, but I think that we could still have one more swipe of the lows, especially with everything that's going on in the news lately with that China balloon, and I guess tensions now flaring up between the US and China. And I've spoken about that on previous streams. If those two superpowers have any type of conflict, it's going to cause absolute chaos in the market. And that's something that I can't predict ahead of time, especially that type of stuff is normally going to occur at nighttime when I'm asleep here in Australia, because America is awake at that time. So if anything does happen, I'm probably not going to catch it. I'm going to have to make my moves the following days after that type of stuff does occur. So this is what I'm looking at. Hopefully that gives you a bit of insight of where I could see sort of Bitcoin pull back to. I've given you some targets to the downside. I've given you a target to the upside if we do have a push. If we do have a push, I'd be looking to possibly short around 23,750. But I do feel that Bitcoin is going to cool off, but continue its run. I believe that it's going to continue pushing to the upside with a very optimistic target of around about $50,000. Who knows if we get there, because that is the 618 retracement to the upside. But time will have to wait and see. I would bloody love to see Bitcoin do such a spectacular move in such a short period of time. But then I do think we would probably get another sort of bear market, so to speak, for another few months before the exponential bull market occurring next year once we have the next halving. Alrighty, guys, that is it from me. Before I let you go, I'd love for you to check out our upcoming webinar on how to create 7 diversified passive income streams using digital assets. You can register for the webinar at breakoutnow.co/income-event. Check it out. There's plenty of things to learn in the crypto space, especially the DeFi space, which I personally only got into about 12 months ago. It's a great way to obviously make passive income even during a bear market. So if you don't know how you can make a few extra bucks, $1,000, per week to subsidize your salary, because the cost of living is increasing and our wages aren't increasing as fast, then I encourage you and invite you to come to our webinar. It's next Sunday, February 12th, Australian Eastern Daylight Time. And yeah, it's going to be really exciting. And that's it from me. Thank you so much for watching. Thank you for being part of my day. And I will see you guys tomorrow for the DC News live stream. Bye for now.